Crane Stratum, fixed income analyst at Merchant West Investments. The Merchant West Sky Enhanced Income Fund returned 0.41% for the quarter, underperforming its benchmark, the short-term fixed interest composite rate, which returned 2.04%. The average local multi-asset income fund delivered a return of 1.1% during the quarter, according to CISA data, while the average local bond fund delivered 1.7%. The fund's net return over 12 months is 6.69% versus the STEFI composite return of 8.32% and a peer group return of 8.17% over the period. The average bond fund delivered 3.82% over 12 months. The fund's overweight position in long-dated government bonds has been a drag on relative performance during the year. The Fed left the Fed funds rate steady at a 23-year high of 5.25 to 5.5% for a fifth consecutive meeting in March 2024, in line with market expectations. Policymakers still plan to cut interest rates at least 3 times this year, similar to the quarterly forecast in December. The plots also indicated 3 cuts in 2025 and 3 more reductions in 2026. Higher than expected inflation data in the US led to a reversal in the downward trend in bond yields, with the US 10-year Treasury yields moving back above the 4% level to 4.19% from 3.88% at the end of December 2023. The trend was the same in most other regions and led to a sharp decline in the prices of developed market bonds, which were down 2.9%, while emerging market bonds shed 1.1%, both in US dollars. South Africa's inflation increased to 5.6% year-on-year in February, from 5.3% in January, slightly above market forecasts of 5.5%, and closer to the higher band of the SARB's target range of 3 to 6%. Fortunately, food price inflation slowed to a near 2-year low of 6.1%, down from 7.2% in January. Core inflation increased from 4.6% to 5% year-on-year in February. The SARB's Monetary Policy Committee voted unanimously to keep the local repo rate at 8.25% at their March meeting. Food inflation was singled out as a key risk to local inflation forecasts. The Reserve Bank governor reaffirmed the need for a restrictive policy stance given the elevated inflation expectations. South African bond yields rose sharply over the quarter amidst anemic economic growth prospects and uncertainty regarding the upcoming election, which have both had a negative impact on the value of the rand. The All Bond Index declined by 1.8%, while cash produced a positive return of 2.1%. While we favor valuations on the longer end of the South African bond yield curve, we remain sensitive to South Africa's weak economic growth outlook, perpetuated by an unfolding global liquidity shock, which is causing the cost of capital to rise. As such, we continue to diversify our long-dated bond exposure with a sizable, low-duration floating rate note weighting in the fund. We have also incorporated an exposure to inflation-linked bonds over the prior year, providing greater protection against macroeconomic volatility. Against this backdrop, the fund continues to be a valuable investment proposition for clients, given that South African fixed interest assets are attractively priced both in absolute and relative terms.